Welcome back. I know this is honestly a lot to grasp in, but trust me, more practice will actually push you a step further onto understanding these things. So allow me to actually do this last video. This video will be titled Confluence. This is Convergence 4.0 with Convergence 4.0. And honestly, this is actually putting everything together to basically get a trading idea and understanding how you can actually get the next possible move, the next possible trade using everything that we have done. So I will be doing an analysis with you from the monthly going down to the daily until we actually get entries using all the tools that we have. Honestly, obviously, as you guys would know, from the monthly time frame, you go to the monthly time frame to actually look at what it is that you have on the markets. So if you look at the monthly, right? If you look at the monthly, you will notice that we do have this formation and this pattern that is on the monthly, which looks very beautiful right now because the market is giving us a clear indication of where it's going from the monthly. So what I would look for on the monthly is I would look at how the market is behaving, how the moving averages are behaving as well. So just by looking at this, I do see that bigger picture from the monthly. If I look at the top of the market, I can see that we actually have potential to come back to these lows. So this is me thinking. So we do have potential to come back to around this level. So I'm gonna look at shorting this pair, obviously in the longest run. So I do think that we can actually find more room to actually come back to these lows, especially because we broke past the previous low. So if you look at that, you do have a high, a low, a high, a lower high, lower low, lower high, lower low, lower high, and obviously the market just printed a lower low. So from here, I do expect that the market can push up to give us a lower high, then we can in the long run see a bearish run. This can happen in a couple of years, obviously, because this is a monthly time frame. But what I am looking for currently is how the market is behaving, so that I will be able to get the next possible move from the monthly time frame. So what I have here is that the market gave us a clean bullish month last month. This month is about to end. We have got like 2 days before this month ends. Today is the 28th of May. I think yes, the 28th of May 2020. So the market is currently trading above that weekly level 0.65 250, and we can possibly see a clean retest at 6700 0.6700. So I do anticipate that the market can push up to that level at least from the weekly. And if I go to the weekly, I can see that okay, we do have a previous low that got broken, and the market is probably coming back to retest that level, and from here possibly see a clean drop from that level to the lows, right? So I can anticipate that the market can rise to that 0.60 that 0.6700 mark. So that is from the weekly. I can see how we broke past this 3 weeks of ranging on this pair. So we did see like a ranging market on this pair. So on the daily, I'm going to go to the daily then and use the tools that I have to actually find possible entries. So the first tool that I can use is the trend line. So if I draw a trend line from the bottom, let me just do this. Sorry. If I draw a trend line from the bottom going up, you will notice how this won't make sense. Like it won't make any sense. So I need to find an area that I can use to actually draw a trend line. And if I look at this, I do see that we do have a trend line that we can use from here. So from this week to that week, we do have to that second week, obviously, before the market gave us this fake out. So once we get a fake out, we do modify, put to that week. And if I copy and I paste just from looking at this structure, sorry, just from looking at this structure, I'm gonna try and draw what I can see clearly just from looking at this. You do see that we have some kind of a channel scenario that is happening when the market is going down. So up, down, and then possibly that upper region. So if you look at this channel, also we do see confluence that we can actually push up to that resistance of the channel, and then from there see a clean drop to the downside. So from there then we can see the market honestly rallying to the downside. So this is just from the daily and what my eyes can honestly see right now. So after identifying these, I'm gonna delete these trend lines. Okay, let me not delete this one because I need to see how it sits on the H4 as well. I need to be confident and I need to be kind of like satisfied with how it sits on the H4. So I do see potentials and possibilities that the market can push to the upside. Again, there's something that I forgot to mention, right? So the market moves in equal pushes to the upside. So this push to the upside will be the same amount of a push that you need to get from this. So you can see that this push hasn't really played out. But if you measure out this one and then you like drag it to that one to that point, you can see that we can get a push to that level before we actually go down. So there's a lot of confluences that you can use. So the same amount of this leg and then you measure out that one over there. So this is a pullback. You're not covering this. You're covering the push to the upside. So we can see a push to the upside at least to that level, which we did cover even from that daily time frame. So from here, I've got like a lot of confirmations that this can be a bullish run, like a push to the upside. From there, I'm gonna then come to look for the daily levels or the H4 levels. So if I can identify these levels from the daily, that would be great, right? So from the daily time frame, I'm gonna use most recent market that we have, which in this case is what we have here. So I'm gonna draw this from the open and the close of those 2 weeks to the tip of this candlestick at the top. So that is from the open and the close of these candles to the top. Look at how the daily time frame then formed. We did see rejection from the breakout, retest with yesterday with the other day's candle, and yesterday's candle, the 28th candle actually came to retest, and today's new candle actually just opened right now. Just opened right now. So this is the next daily candle. So this is the 29th of May. This is a Friday. So this candle actually just opened right now. So from there, I can go to the H4 to actually see what I can potentially find on this market that can help me get possible entries to the upside. So this level remains a strong level from the daily. Whatever level this is, it remains a strong level from the daily. So I can even do this because I know that on the daily time frame we do have that level of sensitivity. From the H4, I'm gonna draw and mark out this level at the top to actually understand what is happening there, because you can see that this is a resistance level. So we failed to break past that resistance level. You can see how we actually closed below that level. So I'm going to be zooming into a smaller time frame to actually understand areas, like possible areas of entries that I can use. So I can then pull out other tools that I have. So I can then even go to the H4 to see what I have on this chart. So I can maybe like start drawing trend lines from there, from the bottom, maybe do that. You can see how I would have gotten that beautiful entry on that bounce of that trend line going up, right? So from this market, I do see like a clean move to the upside from the trend line. Then I can go to the H1 to actually identify what else I have that can help me get possible entries going to the upside. So remember that we have things and tools that can help us. We've got things that we look for before we actually come into trade. So on the hourly, what I am going to look for is we've got two levels that we can actually monitor. So I can draw like a line there. So I'm going to use a horizontal ray on this there. So this is a level that I'm looking at actually for rejections. The reason why I'm looking at this level is because we have got this level acting as a strong level of resistance. If we zoom into the 30 minutes, we can see that, okay, this level has been acting as a level of resistance. And the lowest level would be this level around there. So what I'm looking for is that the market comes to dip into this level, and then from this level, we see a clean push to the upside from this level. So this whole area then becomes an area of interest to me. Let me just put it back. So this whole area becomes an area of interest. So from this trend line to that area, whatever, I'm gonna wait for the market to give me what my reversal pattern. I did speak about that on previous videos, how I can actually get like entries going to the upside, looking at reversal patterns. I will then look out for those to actually find entries. And then again, what else can I use to actually find entries to the upside? I can pull out my fibs. So my fib, I can take it from this previous swing low to that previous swing high to actually understand the level of rejection that we have. So if you look at this, right? So if you look at this, we can get a rejection on about that 50% level. So this is the 50%. So 50 to that 60% level, this is where I'm looking at getting my rejections to the upside. So from here, I do anticipate that the market can rise at least to that negative 27 for my first target. So this would have been let me see. So the amount of pips I would have gotten with this clean move, this would have been a clean 60 pip move, intraday move, obviously. And if I wanted to hold, I was going to hold to that 0.67 level, even from the daily. If you remember quite well, I would have held that 0.67 level because then this is the anticipated level before then the market can push to the downside, right? So on the 30 minutes going back there, what I would look for, number one, is I would look for the market to give me that pattern. But sometimes you find that on the smaller time frames, you do have a clean formation of whatever it is that you're looking for on the high time frame. So if you go to the M5 as well, so this is now me using confluence of everything that I know. If you go to M5, you can see that there's two possible scenarios, right? The market closes above both moving averages, then this would have been a higher low, right? Looking at this smaller time frame Fibonacci, you can see that this can be a possible move on the 60%, but I would be comfortable taking this trade on the close of that 38, on the close of the moving averages. Sorry, if we close above both moving averages, I would then take this trade. Again, you can even look at that counter trend line breakout. If you can see this, you can see this. Okay, this counter trend line might have been broken, but you don't want to use that because you're cluttering your charts. Like there's going to be a lot of clutter on your charts. So my trade would be comfortable if we close be above the moving averages, which would make this a higher low. So if we close above moving averages, then I would take this trade literally there. So this means I would take this trade there, and my stop loss would be below this level, and my target would be that negative 27 from the month, from the daily, or that negative 6700 target, because we know ideally that's where we're headed to. And if you look at the risk management that we have, we're literally risking 11.6 to make up 61.6. So we're risking 11.6 to make up 61.6. So the risk is literally, it literally makes sense. So the ratio that there is literally very much logical because you're risking small to actually profit a lot. So this is how I would have honestly used everything to actually get entries. Now going on to the next chart as well. Let's look at gold. Let's look at gold. So from the daily time frame, gold from the daily, we do have this previous level of support broken. If you look at this, we do have this previous level of support broken, came back to be retested 1 2 3 4 5 weeks, 1 2 3 4 weeks to the low. Then the market pushes up 1 2 weeks, pushes up 1 2 weeks, pushes up. From here we broke above, came back to retest at 1700. 1700 is ideally an important level on this on this instrument that we're looking at. Now another thing that I would have looked at is this trend line from this week, from the first week to the second week. And if you look at this, you can see how we came bounce 1, bounce 2, bounce 3. So if we look at this, there's already confluence on how the market has been setting up from this trend line scenario that we have. So there's confluence from this. So we did get the first bounce, second bounce, and the market came for the third bounce. Also, we are trading above this level. So again, you can use that distance measuring tool, so you can see that okay, from here we can actually start pushing to at least that 1800 mark, so almost pretty much that 1800 mark. So this also gives us the confidence to say okay, gold can actually push up again. We broke past that daily high and we did create a higher high. This would have been a higher low. If you look at this, the lows are actually like going up, pushing high. So you do have that high scenario. So this is let's start from here. So this is a low, that's a high, that's a higher low, that's a higher high, and this is definitely a higher low. From here we're honestly expecting a higher high. So how I would honestly look at trading this right now is I would then know that the market did leave that trend line. So we did get a bounce from the trend line. We did get a rejection on that monthly level. Then I can zoom into the hourly to actually find levels that can help me identify entries. And obviously, I use my horizontal levels, open and close of these two areas. You can see how we actually rejected, they rejected, then we broke out, came back to retest. From there we're actually getting a clean push to the upside. So I would honestly start coming in with my buys literally right now, because I can see that the market is going to set up for a clean bullish momentum. We are trading above this, or the safest trade would be waiting for this high to be broken, which would be slightly late. So if you wait for this high to be broken, you would actually this is what would happen. You would wait for the market to break out, retest this level, then you actually take a trade from this level. But this would have been late for me. This has actually confirmed enough that this market actually did leave that support level. Even if you go to the M15 time frame, remember guys, we're using that smaller time frame to actually identify trading opportunities based on what we have seen on the high time frames. So even on the M15 we did break past this level, come back to retest from here. I do expect the market to push up. Again, we do have this support level over here. You can actually even wait for the market to actually close above the support, then retest, then you can actually take this entry from there. But for me, this has been confirmed that the market is actually on a bullish run based on the high time frames. I'm literally waiting for my entries and my trades from the smaller time frame. So you literally use every single thing. So I will be adding a PDF on the side to literally give you elements to mark out to see what it is that you need to observe, what it is that you need to take for you to know that your conventions list is actually complete. So there is a PDF that can come, that is going to come with that actually. So I will be adding everything on that PDF, and I hope this really makes a lot of sense to you. Well done. This first phase actually just got depleted now. Well done.